Hey everyone, this is C Crypto Daily Buzz. Today is Thursday, April 30th, 2026. This channel summarizes the most important crypto news for investors in Southeast Asia with a calm and balanced view of what really matters for your portfolio. Let's get into the three stories shaping today's market. Our first story is the heavy turbulence in Bitcoin. BTC slipped below 76,000 yesterday before triggering more than $550 million in liquidations across long and short positions, and is now attempting a slow recovery back toward that level. U.S. spot Bitcoin ETFs logged about $137 million in net outflows on April 28th, marking a third straight day of outflows, with Aave and FBTC leading the redemptions. On-chain analyst Kaz pointed out that open interest is rising even as price drops, which suggests fresh shorts are stacking in rather than longs unwinding. He warned that a clean break of 75,000 could open the door to 73,000. And that perpetual futures and spot tape are both clearly tilted to sellers right now, for Southeast Asia traders in the Philippines, Vietnam, and Indonesia. This is a market where leverage punishes you faster than usual. If you are managing OFW or remittance-driven savings through stablecoins, this is a session for patience, not for averaging down aggressively into a falling knife. The longer-term thesis is intact, but the short-term tape clearly belongs to the bears until ETF flows turn green again. Next, a quietly significant move out of Korea that matters for the whole region. Hashed has secured a financial services permission license from the Abu Dhabi Global Market Regulator through its subsidiary Hashed Global Management Limited. The license covers regulated activities, including investment advice, deal arranging, asset management, and managing collective investment funds. In practical terms, this opens an official capital corridor between Korean institutional crypto money and Middle Eastern wealth, with Abu Dhabi acting as the licensed gateway. Why does this matter for Southeast Asia? Because Hashed already invests heavily in Vietnamese, Singapore, and Indonesian Web3 startups, and an ADGM licensed entity gives them a regulated structure to channel Gulf LP capital into C projects. For investors here, the takeaway is structural, not short-term. Regional crypto VCs are now plugging into Middle East balance sheets, which over time can support stronger funding cycles. For Southeast Asian protocols, exchanges, and stablecoin rails, I would treat this as a long-horizon positive signal for C-focused tokens. Our third story is a serious DeFi stress event. Aave, the largest decentralized lending protocol, has been hit by what looks like a slow-motion bank run, after its core USDC and USDT pools repeatedly hit 100% utilization, leaving roughly $5 billion in stablecoin deposits effectively locked from withdrawal. The trigger goes back to a cross-chain rsETH exploit through a Layer 0 built bridge where attackers minted unbacked rsETH, used it as collateral on Aave, and borrowed hundreds of millions in ETH against it. With the rsETH peg broken, those positions became hard to liquidate, and stress radiated across lending markets. Korean media reports describe it as a 14 trillion won bank run, with a $3 billion emergency liquidity injection now underway. Personally, I see this as the most important risk story of the week. It is not an Aave-only event. It is a reminder that DeFi yields are tightly linked, and restaked collateral and bridge security are also linked, and a single weak link can freeze billions. For C investors using DeFi for stablecoin yield, I would lower exposure to high utilization pools, avoid exotic restaked collateral chains for now, and stick to platforms with conservative LTV. Authorities and major risk providers are looking into the exploit chain, and we should expect tighter controls on bridges and restaked assets in the next quarter. Quick recap of today's three stories. First, BTC fell below 76,000 with massive liquidations and 3 days of ETF outflows. Second, Hashed secured an Abu Dhabi license, opening a capital corridor between Korea and the Middle East. And third, Aave faced a $5 billion liquidity freeze due to a DeFi bridge exploit. This video is for information and education only, and is not financial advice. All investment decisions and risks are your own responsibility. If this video was helpful, please subscribe, hit the like button, and turn on the notification bell. And if you want more chart analysis and trading insights, join our free Telegram channel. The link is in the description below. See you in the next one.